If the market's going to give us the opportunity to buy our own shares at a discount to our Ethereum value per share, we're going to take that opportunity and buy ETH at a discount. I want to hone in on this quote coming from a company called FGNX, trading on the NASDAQ under FGNX, a crypto treasury company focused around building out its ETH assets while also working on the real world infrastructure behind Ethereum. As we break down what exactly this company is doing, why they're doing share buybacks, and even hear from the CEO. Now, keep in mind, FGNX has reached out to me. This, of course, is part of sponsored content. As I leave the disclaimers down in the description, this does not constitute financial advice, just represents opinions of my own. But this truly is an intriguing story right now, as the company announced they're doing $200 million of share buybacks, or at least are launching this program based off their current value of Ethereum, right? Because they own 50,770 ETH. And this update was coming from September 28th of 2025. So just a month ago when we got this press release. And if Ethereum's trading between 4,000, 4,100, it gives them around $200 million in aggregate value. And obviously the stock right now is trading for 152 million. So this company is basically focused on being the Ethereum treasury company. They're doing ETH accumulation, yield generation, and real world asset tokenization. So I want to break down just this article here a little bit for you, and then we'll kind of get a broader view of what the company's trying to achieve. But kind of continuing on this quote, buying back basically stock at the current level is not only accretive to our net asset value per share, it's the right thing to do for shareholders. The initiation of our share repurchase program reflects our confidence in FGNX's ETH treasury strategy and our dedication to delivering long-term shareholder value. By purchasing below our net asset value, we are taking immediate action to capitalize on what we believe represents an attractive opportunity. And if we just dive a bit deeper into this company has 5 exponential pillars for compounding their ETH per share. With first and foremost, let me zoom in a little bit here so you guys can see this, is the gateway for institutional capital, offering compliant, yield-enhanced ETH exposure through a NASDAQ-listed vehicle. They want to accumulate and compound ETH to build the largest corporate ETH reserve, stake and restake for yield, reinvest to grow ETH per share. They have a strategic U.S. reserve asset here, provide a market-ready vehicle for U.S. institutions and policymakers to gain large-scale ETH exposure, with stablecoin settlement layer to support the rails behind billions in daily stablecoin transactions, reinforcing USD dominance, and then tokenization and infrastructure to capture value as basically trillions in bonds, equities, and real estate assets migrate to Ethereum. And if we break this kind of down a bit, starting with compounding ETH per share, with institutional exposure with yield, equity-like exposure to Ethereum with programmable monetary base of Web3, native and liquid staking strategies for yield generation, staking rights, basically confer governance and network influence, and then ETH is the only deflationary L1 asset with ETF approval. Capital market advantages, including execute equity to debt offering optimized for ETH accumulation, utilize shelf registration and ATM structures and convertible instruments, and then capitalize on the NAV premium, amplifying Ethereum's network value. Long-term ETH holding reinforces network security and scalability, support critical infrastructure, stablecoins, RWAs, L2s, dev ecosystems, and then Ethereum is the settlement layer for 5 billion plus in daily L2 transactions and growing. And then the market leadership and storytelling, they're looking to leverage equity research, PR, and institutional channels. They're also basically positioned to tokenize institutional grade real world assets, starting with reinsurance, bringing real world cash flows into Ethereum, turns liquid assets into yield-bearing tokens, power on-chain income streams backed by regulated entities, boost ETH demand as settlement and collateral, and the treasury company will remain a capital-light business. And they're also basically claiming to be the most strategic ETH exposure in public markets, with investment highlights obviously being pure ETH exposure via trusted public equity wrapper, staking yield plus DeFi strategies outperform spot ETFs and Bitcoin plays, tokenization upside from reinsurance, those real-world assets, and merchant banking, capital market edge, ATM convertibles, and structured equity. Network aligned supports ETH burn, L2s, and institutional rails, and team with ETH roots since 2014 and Wall Street firepower. And I want to hear from some of those insiders with the CEO here that was recently on a call talking about their Ethereum treasury. So just take a quick listen to this and we'll be right back.
Can you explain the treasury itself? Because we're seeing a lot of digital asset treasuries coming out within this. Obviously, ETH is one of the biggest ones out there. But explain a little bit more. First of all, why go this route? Because there's a variety of ways that this could have been done. Why go this route and kind of jump into a very competitive DAT space right now?
Yeah, good question. Look, I've been early in the space since 2010, and I rode the Bitcoin kind of wave early days, and then I rode the ICO days as well, early in kind of 2013, 14, 15, 16, and then DeFi summer later as well. I think what's interesting about this is a massive megaphone for crypto, right? Think about it. Digital asset companies now are suddenly, public. You can discuss them on CNBC. You can discuss them on shows like this, right, where institutional investors are listening. And so I do think that that's interesting. The second part that's really interesting, this is not anymore about hype. This is really about infrastructure, okay? And so the reason why we've chosen Ethereum as well is because it is a programmable asset. It's a yield-bearing asset.
Right.
It does provide, it's an infra play versus just a kind of, price go up play, right? So there is a reason why we've chosen that as well. And we do think that these types of platforms really allow retail investors to come in and really bet on not just on an asset, but on the management and the future of on-chain economy. And that's part of the reason why we also chose Ethereum, is because we actually do believe on that on-chain economy and kind of build out that's going to happen in that space.
So on that note, I'll pass the question off to you, leaving the link to this interview down in the description below for those that want to kind of fully deep dive exactly what's going on with this company. It's at a very intriguing point in obviously crypto history as we start seeing this brand new bull run and new real world infrastructure being built out and institutionalization of these assets. So I'll pass the question off to you. I'd love to know what you think about all of this in that comment section below. If you're looking at any other crypto treasury companies out there, I'd love to hear about it. But as news comes down the wire, I'll update you here. But on that, as always, I look forward to catching you in the next one.